Hello everyone. Yesterday's Indian market had the crazy behavior. So first, let's see those related things. Then in addition, we can discuss our regular pre-market report for today, 13th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. I don't need to exaggerate the yesterday's Indian market price action since most of our viewers already knows about it, how odd man out it was compared to the normal regular day price movement. So first, we will discuss what FII did yesterday, then 3 reasons what majority of the websites mentioned about it, and finally what I think it would be the reason. Hence, without delay, let's get started. If required, please pause and have a look. This is the snip I took from NDTV Profit website, and to some extent it tells the whole story. First of all, as per NSE data in the cash market, FII net bought the shares for near 7,700 crore rupees. In the index future market, FII net bought for approximately 2,600 crore rupees. In the stock future market, the net bought for 15,000 crore rupees. Then coming to options, there too in the index option, the net bought for 50,000 crore rupees. And for all these, 72,000 crore rupees pumped into the Indian market. As a hedge, they sold only the stock option worth for approximately 2,600 crore rupees. So please think about this sheer volume. In one single session, in spot, in options, in future, in stocks and index, everywhere, FII just pumped the 72,000 crore rupees. Hence, it's no wonder market had its violent move. Now, coming to the reasons, there are 3 predominant ones most websites mentioned. First one, there was an expectation yesterday that China is going to cut the interest rate on mortgages to boost the consumption. We know China is the world's largest commodity consumer, so this expectation increased the commodity price, which in turn increased the Indian commodity related stocks. And hence, if we see the top positive sector yesterday, it was metal increased for 3%. Then the second one, it's about the trigger point. It was from Airtel. Around afternoon, Airtel made an announcement that their business to business arm Airtel Business signed an agreement with a Italy-based company called Sparkle. This company is specialized in global fiber network. If required, please pause and have a look. This is their fiber network which span for over 6 lakh kilometers between all 6 continents. Basically, they connect the country's internet communication through the fiber optics. So as per this new agreement, Airtel will run the business in India and its neighboring countries by using their already established submarine cable system. Hence, no doubt it's a huge business opportunity for Airtel. So its stock price immediately shot up for over 4%. And that's the most widely mentioned second reason. Then the third and final one, which most people might have guessed it just expiry day related volatility. So these were the 3 widely mentioned reasons for the yesterday's final 2-hour rally. Now coming to my view, I agree with all those 3 points. In addition, I think maybe some investors possibly might have known about the India's consumer inflation number beforehand, since at that time it was due to release. During weekend and last week, I came across this news quite often that analyst expects the India's overall inflation as well as food inflation to come lower. But I didn't give much importance to that since it's common among the financial websites. Now coming to the actual data, in July month, consumer inflation came below 4% for the first time in the last 3 odd years, exactly 3.6%. Regular viewers of the channel might remember this. At that time in July, market mentioned this low inflation number was the result of base effect to the 2023 July month, where inflation peaked above 8%. So when compared to July 2023, July 2024 got the low number kind of, which was reasonable. But now for August 2024, again India's consumer inflation data came below 4%, 3.65%. Hence, for 2 months in a row, consumer inflation below the target 4%, which was surprisingly very good. Now, why this is very important? Because in the last 2 weeks from meteorological department, we know this year we will have above average monsoon. So that will control the future food inflation. Second, at present, crude oil is trading at low price, like around $70 US per barrel. So basically less fuel inflation as well. Combining these two with the August month inflation number, which will make the RBI at present very comfortable to perform the rate cut. I mean, in most cases, India's consumer inflation data will be a non-event, but in the last 2 months, RBI was reluctant to cut the interest rate. So in the present context, having two back-to-back month below 4% inflation and very good monsoon is very positive across the stock market. So as I said, maybe some might have known the numbers beforehand, or I may be wrong, then it means we are living in the one perfect true world. Anyway, those were the quick takeaway from yesterday's Indian market. Now coming to US. Last night before their market opening, wholesale inflation PPI data was released, and similar to consumer inflation data on monthly basis in both metrics, it increased more compared to previous month as well as compared to expectation. However, yearly basis it came as better number. Core PPI increased only 2.4% and the overall PPI increased by only 1.7%. So again, it's a mixed data, but US market considered this as positive data since the wholesale PPI inflation increases only if there is a demand means. And now this decreases the recession probability and increased the chance of soft landing. So for the 5th day in a row, US market closed positive. Dow Jones up by 0.58%, S&P 500 increased by 0.75% and Nasdaq up around 1%. In case of VIX, it further dropped by 3.5% and closed at around 17. In line with that, GIFT Nifty also increased marginally and today morning closed at 25,405, equating it with the spot market. For now, it's indicating gap up opening of 50 points. Then about Indian ADR, no wonder in line with the Indian market, all closed positive of above 1%. Here, both the IT stocks, Infosys and Wipro ADR percentage increase is in line with the yesterday's Indian market close, so no fresh movement. But however, both the banks closed more positive than that of the Indian market close, and at present the arbitrage value is around positive 1%. Hence, overall banks are clearly indicating positive, and for now IT stocks has no fresh movement. Maybe if US future market moved into the positive territory means, then probably we might see IT stocks also to become positive. Regarding oil, again the same reason as yesterday, storm is intensifying in the US Gulf and this new China optimism both increased the oil price by 2%. At the time of this video, WTI crude trading around $69.5 US per barrel and Brent crude closed at around $72 US per barrel. So those were the things happened yesterday in the global market. Now let's move to the new India related info. Last night, S&P Global approved the SBI's credit rating BBB- with a positive outlook. I mean, if we just consider the grade alone, BBB- is the lowest investment grade, which is bit of a concern. But on the contrary, SBI rating is always BBB-. Anyway, so we can expect SBI to be on focus today. As a summary, US market closed positive. Very good India's consumer inflation number. Then FII started to pump huge money into the Indian market, and European Central Bank not 25 basis point interest rate cut but cuts the interest rate by 60 basis points yesterday, which all are positive. In line with those, for now, Nifty expects to open 50 points gap up. Let's see. About the things to look out. In the afternoon, Europe's industrial production data, and in the night, Michigan consumer sentiment data and inflation expectation data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 140 points gap up, then consolidated during the first half. However, as we know, because of the sharp up move after 2 p.m., made it to close above 25,300. Thus, on the daily chart, Nifty formed a long bullish candle with minor upper shadow and medium lower shadow. So basically, Nifty has broken out of its recent consolidation and sustained above the critical 21-day exponential moving average. In addition, RSI had a bullish crossover, all indicating a rise in optimism and reinforcing the positive sentiment. Hence, the trend is expected to remain strong and potentially the rally could continue towards the 25,470 to 25,500 range with the immediate support at 25,100. In case of Bank Nifty, similar to Nifty, it also opened 260 points gap up. However, it underperformed, but still the last hour up move trading made it to close above 51,600. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with minor lower shadow and medium upper shadow. Here also Bank Nifty broke out of its consolidation and has started its up move towards 52,000 to 52,500. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 27,000, with maximum new call option rating at 26,000 strike and then 27,000 and 25,500. On the put side, the maximum open interest was at 24,500 strike, followed by 24,000 and 25,000 strike, with maximum new put option rating at 24,000 strike, followed by 25,000 and 25,200. Thus from options data, 26,000 is the immediate resistance with support at 24,500 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.